Hello and welcome to another one of my analysis videos. Thank you for watching. Unfortunately, it's been a long time since I've made one of these videos, and that's regretful because my intention has always been to try to make one of these pretty much every week for the most part. The reason I haven't been able to keep up with these is because lately I've been extremely busy with Bob, which is the Breakout Buster. It's a breakout trading method that I developed along with a trading partner of mine. And for the last few months, we've been putting a lot of time and effort into not only preparing the course materials, but putting up a website, getting it all together, launching it, which we did launch about a month ago. If you're interested, you can check it out. It's breakoutbuster.com. So that's my excuse for not having been able to make these videos more frequently. Having said that, I hope you enjoy this video, and because it's been a while since my last one, I thought I would do things a little bit differently this time. Instead of just pulling up a bunch of different currency pairs and going over charts and doing chart analysis, I thought instead maybe I would talk to you a little bit about some of the things I've learned over the last, over the last time. I've been trading for over 3 years now, and every month I'm learning new things, as I'm sure all of you are. You know, there's no learning limit. It never really stops. It just keeps going. And that's a good thing and it's a bad thing. It's a bad thing if that's not what you intended to make trading. A lot of people get into trading, myself included, because I thought it would be an easy way to make a living after understanding the basics, and then maybe in a few hours a day be able to make enough money to get the freedom to do all of the other things in life that we need to do, or that we want to do, or that we have goals in life for. Unfortunately, it's not usually that simple, and probably more people end up losing money as well as all of the time they invested, as opposed to making a living out of trading. Anyways, so what I want to share with you now, however, is some of the things that I've learned recently and some of the ways that I'm looking at trading, which hopefully can be a help to some of you. If you don't agree with some of my viewpoints, or if you have a different opinion, that's fine. But I hope that some of what I share today will be helpful. In the past, I've usually made these videos about 5 minutes long. If this one goes a little bit over that, I hope you won't mind. I'm thinking more about the content rather than about the time here. The first thing I'm going to talk about is scalping versus position trading. If you've watched my videos in the past, you'll know that I'm a big believer in position trading on the higher time frames as opposed to scalping. You'll also know that I am a scalper, so that's a bit of a contradiction. But let me first explain why I believe in position trading as a much safer way to trade rather than scalping on the intraday basis. Position trading, you end up entering a lot fewer trades, you give a lot more time to your analysis, and your risk to reward ratio is usually always better than 1-to-1. Those are the main reasons why I think that position trading on the higher time frames, and when I say higher, I mean anything over the 1 hour, the 4 hour, the daily, the weekly, and intraday trading is anything 1 hour or under, the 30-minute, the 1 hour, the 15, the 5-minute. I do a lot of intraday trading, like I said, and when I used to be out of control, not too long ago, I would enter as many as 25 trades a day, and I would play with my lot sizes to try to recuperate for my losing trades. So say my first entry of the day was a loser, and let's just say, for example, it was 1 lot. Well, my second trade, I was always tempted to enter at 1.5 lots or 2 lots to recuperate what I had lost on my first trade. Now, I developed a lot of different spreadsheets and calculators, and I did so much back testing and forward testing that I thought I was pretty safe with my money management plan to do recovery trading, to up the lot size, to consider the market and then see if it was worth upping the lot size on my next entry. I've done all of that, and even with the most stringent rules that I thought I could keep, there were days when I couldn't keep them, and I ended up really hurting myself and the account in the process of doing that. That doesn't happen with position trading. With position trading, you have hours for your trade to unwind. You have days, sometimes you have weeks for the thing to unfold. That in itself is safer. Not to mention that you're basically escaping the woes that intraday traders face based on manipulation of the markets, where you have up and down, spiky this, spiky that. You don't know if it's going up, you don't know if it's going down. When you're doing a position trade and your stop loss is 50 to 100 to 150 pips, you're stepping away from all of that fake out move. So that in itself is another big benefit of position trading. Having said that, I do want to just say that most of the trading that I do is scalping. And most of my trading is bob trading. It's breakout trading of 3 different breakout methods that I personally have a lot of confidence in and that I believe in. And I'll tell you why. I'm one of the people, those kind of people, that when I see the numbers of the last 100 days or the last 200 days or the last 3 years that I forward tested something and I keep a track and a daily log, when I see the numbers of the probability, then I can believe in it. I like to see the proof of the pudding, as it were, to be able to believe and have confidence that going forward I'm willing to risk my money on this trade. And that's what I do with Bob, for instance. I'm just using Bob as an example because that's what about 90% of my trading is. It's Bob trading. It's very simple. I've seen numbers in the years of backtesting that I've done, and I've seen numbers in the years of forward and live testing that I've done to know that I am confident enough to take a trade. Even if I get stopped out, I'm okay with that. I'm psychologically prepared because at the end of the week or at the end of the month, I am confident enough that my numbers are going to be positive numbers. It's taken me a long time to be as disciplined as I want to in my trading, to where I can enter, hold that position for as long as I need to hold it to get the best possible target out of it. That's time proven. So intraday trading has worked for me. But still, having said that, I want to say position trading is what I consider to be the safest for most traders across the board. I get a lot of emails and chats from people that say, I don't have enough time to trade because I have a day job, so I'm limited to the 4-hour time frame and the daily time frame. And I always tell them that's the best time frame to trade. Okay, the next subject I wanted to talk about is market maker method of trading. Hopefully most of you know what that is, because there are people like Steve Morrow and Martin Cole who have recently kind of brought this subject up to the forefront. And somewhere about a year ago, I became very fascinated with that subject in trading. And I've actually turned a lot of my attention towards that and have incorporated market maker method trading or education into my whole process, if you will. And after about a year of being versed in the subject, I still have a lot of questions, of course, because if there were no more questions, then obviously trading would not be a challenge, and we would know exactly when to enter and when to exit. So we'll never know that, because the curtain, if you will always be hiding what's behind, and I don't think we'll ever be given a clear view of what's exactly happening. Who tells the ocean when to stop at the sand? You know, who tells the euro that the average daily range is supposed to be 161 pips, and maybe for the month it's been 181? Don't go too much above that, otherwise it won't look right. I mean, how do we know that the move every day for these pairs is just coincidental retail traders or hedge funds or banks that are entering and exiting the market? I personally have chosen to believe that it's a little bit more organized than that, and there's a business model going on behind the scenes. That business model is to extract as much money as possible from the markets, and to do that, there's a lot of fake outs. You induce traders to go one way when in reality you really want to go the other way. Anyways, that's a subject in itself. What I wanted to pay attention to is that in the market maker method of trading, pretty much the focus of how to trade that is on the lower time frames. The 15-minute, for example, is the main time frame that's taught to trade the market maker method, to find out what their true intentions are, to spot their fake out moves, and then to get on the right direction. Why am I bringing attention to that? Well, because is that a contradiction to to swing trading, to trend trading on the higher time frames? Look at the euro dollar, for instance. Look at for how many days and weeks and months the trend has been obviously going up. And is this a retracement of a correction that will precipitate a continuation of the uptrend? That's a way to trade, right? I mean, we're looking at the daily time frame, but trading the market maker method, you kind of have to forsake that concept, and you have to take every day as a separate block of time and trade just that one day. So that's something that I will be happy to share with you as I progress in my own understanding and learning of it. Should I be looking at the higher time frames at all, or should I just trade every single day on its own based on what I am trying to learn about identifying market maker methods? Or should I maybe use both methods? Trade the swing trading method on the higher time frames and hold my positions for weeks or days or months, and in the meantime trade every single day looking for those little funny moves that the market makers make happen on the smaller time frames. The last thing I'm going to say before finishing this video is, well, thank you for watching, and also just a little note about mentorship. Our mentors who charge you money to learn how to trade, are they the real deal? Why are they selling their trading method? Why are they charging you to teach you how to trade if they're really such good traders? Couldn't they just be making more money trading? And obviously I hear that question come up quite a bit, and it doesn't really matter what my opinion is. I don't think there is any such thing as a professional trader who is going to trade profitably day in and day out, week after week, month after month. And I certainly don't think that there are mentors who can do that, because I don't think they would be mentoring. I think they would put their efforts into just trading day in and day out and retiring after a year or two. Having said that, is it fair for them to charge so much money? It's a question I get asked a lot. That's why I'm talking about it. I don't know if it's fair that they charge so much money, and I don't know if I even agree with the concept of a mentor, quote unquote, who does not prove their own trading ability by showing you their trading accounts, or that they know how to trade because over the last year they've been profitable, or over the last 3 months they've been profitable, or however long it takes to convince someone. For me, I would like to see a year or 6 months worth of trading, because I've had great months. I've had months where I've made 42% or even more. And then the next month I've had losing months. So you need to see both of those months to know if I'm good or not. Why not see 3 months or 6 months to know if something is really all that it's cracked up to be? I guess what I'm trying to say is that every individual is going to have their own journey, and they will need to make up their own mind how and where they intend to invest their money. It might be well worth it to give a mentor $5,000 rather than putting $5,000 into a trading account and then losing those $5,000, although the experience of having lost that money will obviously teach you something. So it's kind of half a dozen of one and six of another. It would be nice if there weren't these exorbitant fees for teaching and training, and if it was more reasonable. But really, in the end, it has to do with every trader and how far they're willing to take their training and how serious they want to treat trading as a business or as a means to hopefully make a living out of. Anyways, thank you for watching this video. I hope some of this was useful, and I look forward to having you watch another video in the future. If you have any comments, please feel free to leave them, and have a great day. Bye.